Hi, this is Group Super Smash Brothers, and this is our financial outlook, usage of funds, and what we need from investors. You, as the investor, we will require $400,000 in startup funds for the first year. After that, you'll begin seeing that all of that money is going to go into prototype the first year, into making a prototype that we can pass out to 10 or 50 or so customers to test. And after that first year, you'll start seeing revenue.
The $400,000 initial investment will be broken down by the usage of funds for the technology. Our part consists of two different types of tech. We've got old tech, which is just off the shelf, basically commercial products that can be bought and compiled from multiple sources. It's technology that exists currently. And then the new tech consists of the mechanical to electrical energy conversion that will require research and funding for that.
It will take a year to create this new prototype and get several copies to test customers. It will take around 2 to 3 months to put together the required specifications and the theory behind how the technology actually works. After that 2 to 3 months, we'll spend 3, 4, 5 months creating the prototype itself. We already have access to a machine shop, but that costs money, to office space, etc. And then after those 3 or 4 or 5 months creating it, and then the final one will be the final few months will be spent creating variations of that prototype or copies of that prototype to get out to a couple test customers.
The cost for the first 3 months will consist of around $105,000, mainly for the main part of the cost will be for people, consultants in developing the technology. We reference several research professors, and we've got our estimate of about $100,000 for man labor based on their rates, and then the other $5,000 will be costs for travel and also trade shows, industry events, so that we can get our start to get our product out there.
So, having developed the new mechanical energy recapture system in the first 3 months, which was all theory and the majority of the expenses going to developing that technology, the cost for the next 5 months breaks down to about $100,000, and that's spread a little more evenly between again, people costs to pay ourselves and for machine shop time and for people to machine certain parts, and also mostly materials, because that's when we'll be building the first prototype. So that pays for off-the-shelf prices, which we've looked up for example, casing for the battery, for the energy storage portion itself, the battery, the user interface, etc. And that breaks down again to about $400,000. And finally, about $10,000 for equipment costs for machining and putting together the prototype. So after the end of that 5 months, and we're now $205,000 in, and we'll have a working prototype.
The last 4 months of the first year will have a cost of about $200,000, 50 of which will be again for personnel. That'll be for ourselves and for other testers, and maybe very minimal consultant cost. We have $100,000 dedicated to materials, specifically that is for materials to give out prototypes to potential customers to test, and to give them a feel of our product and an idea. And then we have $40,000 for equipment cost. Is for testing and development, and then the last $5,000 will be again travel expenses, and then also maybe some legal fees as far as drafting non-disclosure agreements for the prototypes. Just giving ourselves some legal protection when we give those prototypes out.
So in terms of financial outlook, we're going to be selling the product for about $60 in the end retail, which is a figure generated from looking at our competitors' prices, which means that we will want to be able to sell it for about 30, which means that we'll be able to want to make it for about 15. So that's 15 to make it, 15 for the retailer, and then we'll have a profit margin of $30 on a $60 price unit. So after your initial investment of $400,000 in a year, we will have several working prototypes out to potential customers to test. At that point, for the next 5 years, we'll begin selling them. Like I said, the target price is $60, and we'll make a $30 profit off that, so $30 per unit. And we're looking to sell 2,000 the first year, which gives us a revenue of $60,000. And our company will double in revenue every year after that. So first year $60,000, next year $120,000, year after that $240,000, and finally by the 5th year $480,000. So that's including the first year for prototyping. So after 5 years, we will have made $900,000 less your investment of $400,000. That leaves you with a profit of $500,000, and we will have captured a 1% share of the market. After that, we expect to take off and continue making you money.